Hey, good evening, everyone. My name is Joe Marley. My company is called Signature Business Group. We're business brokers. We assist individuals in the sale and acquisition of small businesses. And maybe I'll begin by just giving you a little bit of background. I'm not originally from the Midwest. I was born in Brooklyn, grew up in South Jersey, went to high school in Atlantic City, and graduated from Rutgers. My wife and I moved out here in '79. Both our children were born here. I've been involved in the sale of businesses for about 30 years. It began in the franchise arena. As I look around the room, you might remember the Bressler 33 flavor ice cream stores. They were based here in Chicago. They were competitors with the Baskin-Robbins chain. At the time, in the early 80s, we probably had about 450 stores across the country. I was their vice president of sales. Today, I'm not sure you could find a Bressler ice cream store in the Chicago market, so things do change. From there, I went to CarX for a number of years. And so the process of selling businesses, whether it's ice cream or whether it's automotive repair, we're going to talk about why there's really not a whole lot of difference there. About 15 years ago, I started as an independent business broker. And the types of businesses that we typically get involved with are what I call storefronts or smaller businesses that are anything from restaurants to laundromats, hair salons, flower shops, those types of things. We've done some light manufacturing. We've done some e-commerce types of businesses, auto repair, etc. What I'm going to talk about tonight is that process, and you're going to see that regardless of the genre, regardless of the type of business, the process is similar. So we're going to talk about initially the selling of a business and what folks do to get their business listed and how we go about finding a buyer. And then we're going to talk a little bit about individuals that are looking to buy businesses, and that process is, you'll see, is the reverse of that, and they're connected. Kind of an overview of what we're going to talk about. We talk about why people sell their businesses. We talk about who they should use to help sell their business. We're going to talk about what's needed to prepare to sell their business. One of the real things that we bring to the table as business brokers is the ability to help them value the business, determine what the selling price should be. We're going to spend some time on that, how we market it, and then what's the process for completing that sale. People sell their businesses for a number of reasons. Ideally, it's because they're at the conclusion of a very successful and long business career and they want to retire. And we work with attorneys and accountants who have clients that reach out to us because their client is looking to do that. They may reach out to us direct because we have a presence in the marketplace and we help them have an exit strategy for their business. However, sometimes it's because of personal reasons. It could be health, it could be family, it could be relocating. Sometimes they own multiple businesses and they want to sell one of those businesses and retain the others. In today's environment, we're seeing more and more of situations where people are calling us and contacting us because their business is struggling because of the pandemic. Sales are not where they used to be. That doesn't mean it's not saleable. There's always someone out there that's looking for an opportunity. If that opportunity is we just did one on Clark Street. It was a small restaurant that was struggling. Someone else bought that business, is in the process of remodeling it, totally redoing kitchens and bringing in second bathrooms, and they're going to revitalize that spot that struggled under the previous management, but the new owners coming in with a game plan are going to make that successful. And we were able to put those two things together. As far as who should sell your business, if you're a realtor, you have the option of selling your own house, but in most cases it's done by a real estate broker. We don't recommend that you sell your own business. You need to run your business and continue to operate it successfully until a buyer comes into place. You can list a house today and that house might sell within a week. It can take 3 to 6 months to sell a business. In the meantime, you got to keep running and operating your business successfully, and that should be turned over to a professional to do that. We also don't recommend that it's a real estate broker, because the difference between a real estate broker and a business broker is they're worlds apart. As we go through the process, you'll see the things that we do as a business broker. The main thing is we represent both the buyer and the seller. So businesses list with us, but buyers come to us because they answer our ads, and they look for us to guide them in the process of deciding whether that business is something that fits what they're looking for. So there's usually not another broker in the mix. It's done by one. When we talk to people that are looking to sell their business, we discuss what they need to do. Get their books and records in order. We have to look at least 3 years worth of financial statements. When we're looking at preparing a loan for them, the banks want to see their financial statements. They want to see tax returns. We look at their assets, we look at the inventory, because inventory typically is in addition to the price of the business. Not all the time, but many times it is. We also then help prepare them with the documents they need to sell. A non-disclosure allows us to give a prospective buyer the confidential information that we've been privy to see. So they have to provide that prior to us giving it to them. We also take a buyer profile or a financial statement. Once they go through the preliminary steps of looking at buying that particular business, I've got to make sure they have the credentials and the ability to buy. Financial wherewithal is very important. We have to qualify them. A letter of intent is a simple offer sheet. If it gets past that, that's when they can bring in their attorney, who has to then draft a purchase agreement, and we're going to come back to that in a few minutes. So the various things that we do to...
Being that you're representing both the buyer and the seller, isn't that a potential conflict of interest?
It's not. And that's a good question. Realtors have a very strict code of ethics that they have to follow. Business brokers are not in the same, under the same restrictions and guidelines that realtors are. I didn't set the rules when I became an independent broker. That's the lay of the land. When we run an ad on Biz Buy Sell, buyers call us directly and they inquire about that business. We forward out the information, intro letter, require certain things back. We have guidelines that we have to follow, but no, it's not a conflict of interest under the so-called business broker guidelines that we have to have a license to do. One of the major values that we bring to the table for small business people looking to sell is we help them determine what the value of that business is. And that's a critical part of determining how we list it and what we're going to try to get in the way of a price. There's various ways of doing that, but the multiple of earnings is the key types of valuation that you'll see kind of across the board in the areas that we deal in. Yes, there is some value to assets, but if you bought a restaurant in Chicago, the equipment and all the fixtures and everything is there, that's part of the sale. You get that. We don't value what the stove and the refrigerator and the hood cost. People buy it based on what the sales are and what the profit margins are. Having seller financing as an option is helpful because at times when businesses don't have the ability to go to the bank because their financial statements from the business are not strong enough to support a loan, then sometimes the seller has to step up to the plate and provide financing. If we're selling a business for, let's say, a $150,000 business and they've got $80,000 or $90,000, that doesn't make them a bad buyer. They just don't have enough capital to complete the transaction, and for the seller then needs to be willing to do a little bit of financing. Larger projects where we're talking about $500,000 or $1 million, then they have their own bank financing to do those things, and we're not too concerned about that. But most of the deals we do are under that bogey, more in the $250,000 to $500,000. But there's a lot of businesses that we sell that sell for as little as $30,000 or $40,000 or $50,000, depending on a hair salon might sell for that particular area. We also, when we talk to sellers, we ask them to take off their seller's hat and put their buyer's hat on. What would they pay for the business if they were looking to buy the business that we're trying to sell for them? Because when you have your home, you think it's worth more because it's your home and you have a personal attachment to it. But that's not really anything to do with what that business is truly worth. So look at it from a different perspective, and it helps them understand that the price we're trying to come to is the one that's going to help sell their business, and we're going to talk about why that's the case. When we talk about multiple of earnings, we look at the financial statements, we look at sales. Obviously you take your profits. If your accountant's doing the right job, he's going to show as little profit as we can so that the gentleman or woman doesn't have to pay taxes on those income. That's fair. But there's a lot of items on that balance sheet or on that P&L and tax return that's considered personal expenses. They can deduct. We always add back to salary, by the way, but they can add insurance cars, sometimes auto expenses, travel expenses. They're not necessarily directly related to the business, but it's allowable under the guidelines on their tax returns. And depreciation, it's a deduction that most businesses use, but you don't write a check to depreciation. That money's still sitting in the account, and that money therefore falls under the term seller discretionary income. That allows us to have a higher bottom line seller's discretionary income, and then the multiple is a multiple of that number, not what's shown on a tax return. So our job is to analyze those statements with the seller, sit down, go over the numbers, back and forth as to what is a true expense and what is something that we can use to enhance the bottom line. Once we know what the price of the business is, then our job is to market it. We have to create the ads. Those ads include things that we put on BizBuySell, BizQuest. There are some internet sites, by the way, that cater to a particular industry. There are a number of sites that are restaurant only. By the way, there are also brokers that only focus on restaurants. In the city, if you've heard of the Kudan Group, they're strictly restaurants. Eats is strictly restaurants. There's actually a guy out there that only does laundromats. We tend to be more of a generalist, and we handle all types of small businesses, and it gives us the ability to attract different types of buyers. The process, however, is similar. So we create the ads. That ad also tells the buyer what they're looking for. They want to know what the price is, they want to know what the sales are, and they want to know what the profit is or what the cash flow is to justify the price that we're asking. That will appear in the ad. Some people search by income. I'm looking to make $100,000. They can search on these sites, and businesses in a particular category will show up just showing that. So those internet sites that we use are extremely valuable. In the old days, we used to advertise in newspapers. Nobody reads newspapers anymore. We'd be in the sports section of the Chicago Tribune. On the back side of the sports page was full of businesses. There's no businesses listed there anymore. It's all on the internet. That's good, but it also tells us that the buyer is coming to the table much more knowledgeable than they were 20 years ago. There's a lot of good information that you guys can look at if you're thinking about buying a business as to what you should look for. What are the rules and how are the formulas created? BizBuySell has many drop-down boxes that gives you a lot of great information about how to buy and sell a business. And so, however, that means that the buyers that come to me are knowledgeable and expecting certain things, and we have to make sure that we give them that information. Similar to homes, we want the businesses to look good, so curb appeal is important. We'll walk that business with them. We'll go into that restaurant or that flower shop or that hair salon, and we'll make suggestions how they can make it look better when a buyer comes to visit. That's important. Okay. We also make the seller aware that they're an important part of the sales process. After a while, buyers don't want to talk to me anymore. They want to sit down and they want to talk to the guy who's running that business. And we have to arrange to do that. And so the seller then gets plugged into the equation, whereas if you're selling a home, the two brokers work all those details out and the seller really is not involved. That's not true when you sell a business. Some of the things that you've learned, the things that you do in your business is better conveyed by you than it is by the broker that represents you. The process of completing the sale starts with a letter of intent. So all the things I talked about, pricing the business, advertising the business, screening and qualifying the buyer, leads us to the point where that buyer makes an offer on the business. We provide a very short, detailed letter of intent, and the only purpose of that, or the main purpose of that, is to establish the price. Okay? Once the buyer and seller agree on that, there's a number of things that come into play. One, they have to be approved by the landlord. Most of the things that we do are leased. They're in strip centers, they're in street locations. Sometimes there's land and building involved, but in most cases there's not. We can't go to the landlord with a potential buyer who hasn't made an offer on that particular business, because now I'm wasting the landlord's time and he doesn't want to do that, and I don't blame him. We also are not going to go to a lot of work with a particular buyer. We lead them to the point where they can make us an offer, and then we get serious. You need a purchase agreement. An attorney does that. They don't really need to engage that attorney until they get to that step. They don't really need to hire an attorney and spend money until they get to the point where they've made an offer contingent upon landlord approval, review of books and records, things that makes it kind of a non-binding letter of intent, but it establishes the initial step that's required. There's negotiations leading up to the final closing, but like any other business or even a house in that case, there is a closing date that's set. So that's kind of the flow of activity that a business broker guides them through. When we talk about buying the business, many times the seller or the buyers call us direct on a particular ad that we have. Okay? My job is to screen them to make sure that the business that they're calling on is a fit to what they're looking for. So we have to ask questions about that. There's a lot of investors like yourself that you mentioned that call us on a particular business we have listed, and that business has certain value to them, certain interest to them. But not all businesses can be bought as investments. A lot of small businesses, some of the things I described, are better run owner-operated. Someone needs to physically be there to control costs, to control labor, to keep things running smoothly, because the business that we're selling is owned by that person. So to hire or to have a low volume business with the idea that they're going to bring in a manager to run it, the cash flow doesn't justify that. And we might as well have that discussion up front than spend a whole lot of time looking at financial statements when they're going to realize pretty quick that this is not a good fit for them. I save them time, I save us time, and I save my client, the seller, time as well. So our job is to screen the buyers, help them buy something that fits what they're looking for, and we do that by asking them about what they want. What are they looking for? If they aren't specifically answering an ad, and they come to us and say, Joe, I'm looking for a business. I go, well, what are you looking for? Well, anything that makes money. Okay, that's not a good answer. All right? If you're going to buy a business, a small business, you need to be something that, if it cash flows, great. But in most cases, it doesn't. Therefore, you need to be involved in something that you like doing. You don't want to be in something that you don't like doing. If you don't like restaurants, then let's not talk about restaurants. Okay? So we can eliminate categories. And so as a broker, we give them input guidelines as to what they might do to find something that's suitable. We also want to know what their investment capabilities are. There's no sense looking at a restaurant that costs $500,000 when they've got $50,000 to invest. It's not going to work. They're not going to get financing on that unless they have a strong personal financial statement. And again, a lot of the buyers, don't meet those qualifications. So I look at their personal financial statements. Credit score is important. Landlords are going to look at your credit score to see if you qualify, if they want to lease that space to you, because you have to be approved by the landlord, not just have a deal with the buyer or with the seller. And then in many cases where there isn't the need for banks, sometimes they have a banking relationship, but not all the time. We can put them in touch with individuals that do SBA lending. We've done that in the past. And we can so guide the buyers through the process of choosing a business. Many times, the buyer is actually doing that himself or herself. They're going on to Biz Buy Sell. They're looking at different types of businesses. They're calling me direct on businesses because they're not using a broker to help them get to this stage, and that's fine. We make them aware that it's a process. It can take a while to come up with something that fits what they're looking for. They need to be committed to do that. And again, using Biz Buy Sell and BizQuest as their main vehicle to find businesses is what we instruct or suggest they do. Those brokers that have those things listed are going to ask for the same things I talked about. They're going to have an NDA. They're going to ask for a financial statement leading up to the point where they can go visit those businesses, meet with the owner. Once they make an offer, they can then do due diligence to make sure that the numbers that they received are correct. And again, part of our responsibility as the broker is to help them do that. Once they get to that particular point, as we mentioned earlier, they do a letter of intent. They can ask for anything they want at that particular point from the seller with reference to that business. Financial statements, records from employees, background, anything on the business, who they're buying their supplies from, etc. They're going to engage an attorney to draft a purchase agreement to buy it. And again, we get together closing. Usually closings happen at one of the attorney's offices. Sometimes we have to refer attorneys. So we work with a number of legal firms that are good at small business transactions. And because sometimes the buyer or the seller really doesn't have an attorney that fits that type of mold. There's all kinds of attorneys, and having one that can keep the costs down and that understands once the buyer and seller agree, the end goal is to get them to the point where they finish the transaction. We don't need to create a legal mayhem that sometimes attorneys get into. I'm glad there's no attorneys here. Attorneys are a necessary evil, okay? But they're a pain in the neck because they create obstacles to prevent us from completing the transaction, right? But we do need them. Again, an overview, summary of buying and selling businesses. It's brief. Open up for discussions, specific topics that may have come up that you guys have thought about. I'll be happy to try to address them if I can.